தூக்குங்கிறதுக்கு என்னமோ சொன்னால அந்த பொம்பளை கேட்டா என்ன அப்படி கொஞ்சம் பிள்ளைல அரவணைக்க முடியாது அந்த பொம்பளை என்னாச்சு அந்த பொம்பளை தூக்கு என்ன என்ன சொல்றாங்க மகா தூக்க சொல்றாவா
Good evening, all.
Good evening, ma'am.
Okay, so let's start. We have almost 30 participants. Yeah. So, last session, we saw how to make journal entries, right? We saw what is a journal entry. So, it's the first book for like making entries of all the transactions, credit transactions or cash transactions. And based on the type of transaction, that is like under which category the transactions are made, that is whether it comes under real account or whether it comes under nominal account or the personal account. So depending upon the category, the type of the account transaction, so the entries will be made. Okay, and all the transactions will be seen from the business point of view. So whatever comes in and goes out of the business, everything will be seen as a business point of view. Even though if it is a like investment made by the owner of the company, the proprietor of the company, or if the owner or proprietor of the company withdraws cash or cash value from the company, so it is always seen as a separate entity. So owners accounts or like separate, the business is seen as a and then we saw the rules, like for making entries. So if it is the personal account, so do you guys remember what is personal account and what is the real accounts and what comes under nominal accounts? Yeah, do you remember? Okay, let me highlight. So personal accounts, it refers to all the persons, all the organizations, so with whom the organization is having the transaction. Okay, it can be either an individual person or it can be an organization or an outside agency. So with whomever the organization is having a cash transaction or a transaction related to money value, or if it is a print transaction. So all those persons or all those organizations and all those agencies, they come under real accounts. Okay, and the type of transaction which takes place. So why the transaction is taking place. So under what category it comes, under what heading it comes. So that also comes under the personal account. So personal means person. Okay, it can be a real person or the company. Company may be the representative of the group of individuals. So then comes the nominal account. So I'm sorry. Then comes the real account. So real accounts are all the aspects which are real in nature. That is, which are the assets and liabilities of the company. Okay. So assets it represents all tangible and intangible assets. So tangible, which can be touched and felt, and intangible, it has a money value, but it cannot be touched and felt. So all the copyrights, patent rights, and the goodwill, trademark of the company, the company's logo, the company's caption, whatever, every company will be having a caption or something, a formula. If it is like a food product, they may be having a formula. So all these things comes under intangible assets. So money is not it has a monetary value, though that is not cannot be seen. And then finally comes the nominal accounts. So nominal accounts are everything all the expenses which are made from the organization. So that is considered as liabilities, and all the incomes generated from making sales of the products. So that is seen as the what do you say, income to the company. Okay, so liabilities and income, the expenses and the income. So that comes under nominal account. So personal, real, nominal accounts. And there is a rule for personal, real, nominal. So if it is a personal account, if a transaction is made under personal account, so it is always the debit the receiver and credit the giver. So whoever receives the money or money value, it's always, they are always considered as the debitor because they are the receiver. And who gives the money or money value, so they are always considered as the creditor. And in real accounts, it's debit what comes in and credit what goes out. So whatever comes into the organization, so that is considered as debit, and whatever goes out of the organization is credit. Again, seen from the business point of view. And then coming to the nominal accounts, so debit all expenses and losses, credit all incomes and gains. Clear? Hope these points are clear. Yeah.
Yes.
Yes. Good. Okay. See, accounting is a subject, which you cannot brush up just just before the exam is happening. Very difficult to understand and register everything in mind. So not like the other subjects, because other subjects are completely theoretical, and accounts is something which you have to practice frequently. You have to keep few points in mind, especially these rules in making the entering the transactions in journals or then posting in the ledgers. So it should be there should be a frequent what do you say, exercises or something, you should be doing it on either on a daily basis, at least making one journal posting, or trying a ledger posting on a daily basis. Better have a a notebook or something for this to work it out. And then only then by the time of your exams, you will be very much aware, what is journal, what is ledger posting, and what is how trial balance is prepared and everything. And just brushing up before the exam like other subjects, so this is not going to work. Okay, so let's start today's session. So Today's session, we are going to see about compound journal entry. So last session, we have seen how journal entries are made. We have seen at least 2 illustrations, I think so. Yeah. So compound journal entry. So how it is made and why it is made, under what condition, these entries can be, made in the journal. Let me change the slide. Okay. Yeah. So it's a single entry that combines multiple transactions or accounts into one journal entry. That is, it simplifies the recording process and improves efficiency. So if any one aspect is the same, if, for example, if cash aspect is the same for one particular type of transactions, or if the date aspect is the same, if for a particular date, under particular heading, all the transactions are made. So in that case, the compound entry can be made. For example, let's take for today. So today is 28th of October. So today by morning, the company has sold goods worth 10,000, and by afternoon, the company has sold goods worth 5,000, and before closing for the day, by evening, again, they have sold goods for another, 7,000 or 8,000, something. Okay. So if you see, the date aspect is the same and the nature of the transaction, so sales. Okay, so that is also the same. If all the sales transactions are cash transactions, again the cash aspect is the same. In case if it is one of the entries, one of the transaction is a credit transaction. Morning and afternoon, the sales, it was cash sales. It is immediately after sales, the receiver has paid back the cash. So it's settled, right? But the third one, that is before the end of the day, there was a sales for 7,000. That was a credit sales. It means the receiver is yet to pay 7,000 to the organization. So in that case, the transaction which has taken place in the morning and the afternoon, that can be made as a single transactions in as a one particular entry, instead of going with 3 different entries. The morning and the afternoon thing which has happened, the sales happened, so that can be made as one single entry, and the evening transaction, which is a credit transaction, that can be made as a different entry. Okay. So when the transactions of the same nature occur on a given day, so those transactions, it can be entered in the journal by means of combined journal entry. So let's have an example. So on April 1st, 2023, Akash commenced business with 10 lakhs, goods worth 3 lakhs, and furniture of 1,50,000. So here you can see the date is the same. The date aspect is the same. So on 1st of April, all the 3 transactions has happened. All the 3 transactions has happened. The second part is all 3 can be considered as the it is the investment in the business. Akash has invested in the business. One transaction is in cash, a hot cash, which is not 10 lakhs. And Akash has purchased 3 lakh worth raw materials or goods, which is to be, for resale, from the company. So that is worth 3 lakhs. And then, and again, furniture, for office use. So, and that furniture is for 1,50,000. So everything is for business purpose. So all these 3 investment is for business purpose. So here 3 aspects is the same. The date, the account, the nature of the account is investment, and all 3 were money. I mean everything it's hot cash has been paid. If just goods has been purchased, it's not a credit purchase. It's completely cash purchase. And the furniture, of course, cash has been paid to purchase the furniture. So here we can understand. So all 3 aspects, it's in the same, same nature. So the entry can be made like this. So here, this is how, the compound entry, the compound journal entry will be made. So first comes the date column, and then the particulars column, ledger folio, debtor and credit. So you know what is a ledger folio column? This transaction, when it is being posted in the ledger, so you have to mention that particular ledger number here in the journal. Okay, so that's why we are leaving a column for ledger folio. So since it is like the investment same date, you can make the entry in just like entry like make it as one single entry. So you don't have to know each and every line doesn't have to be you don't have to mention the date in all the entries. Okay, all the transaction entries. So make it as a like single entry here. So the first aspect, cash. So which is now worth 10 lakhs. So 10 lakhs has been invested here. And then stock. Again, cash has been paid to purchase the goods for resale. So by paying cash, so it is no like for 3 lakhs. Here I have like mistakenly made it as 2 lakhs. Sorry for that. I'll like change it. And then for furniture, cash has been paid for purchasing the furniture and it's for 1,50,000. So furniture account debtor, again 1,50,000. So if you see everything, all the three aspects, it comes under capital account. To Akash, capital account. Okay. So if you total all the three, so like when you're like making this as like 3 lakh instead of 2 lakh, so it becomes 13,50,000. So this is how like compound entry is being made. Here you can have the narration, like one single narration is enough for all the three transactions, okay, all the three entries. So it can be mentioned as being assets introduced in business. So is this clear?
Yes, ma'am.
Yeah.
What does mean dear,
Yes.
ma'am? Dear and
Dear is debtor. Debtor. Because this this thing like applies the rule of personal accounts. So debtor the receiver, creditor the giver. Yeah.
Okay, thank you.
Yes, ma'am.
Yes. Okay, fine. So this is one type of compound journal entry. We have now like other type also. Let's see. Okay. So here is the other one. Yeah. So on July 17th, 2023 is the year. So particularly on one month, that is July 17th, Akash the proprietor drew 5,000 for personal use. So all these things, it comes under drawings account. Okay. So again, on the same month, on 25th, so he drew a check for 10,000 for personal use. So if it is a check, like if he has deposited a check to the bank, it means like the bank has he has withdrawn the cash from the bank. Okay. And the third entry, if you can see, so he took 7,000 worth goods for household use. That is the personal use. Okay. So all these transactions, it happens like under one single type of account, which is the drawings account. So the owner has withdrawn all the three types of like cash or cash worth transactions, like for personal. Okay. See the first type of transaction. So what he has done is 5,000 has been withdrawn from the office cash. No, you would have known about petty cash. Petty cash is something, like all the organizations would be, like maintaining. Depending upon the size of the organization or like day-to-day transactions of the organization, the petty cash, like can range from 5,000 or 10,000 to even, like 1 lakh. Okay. No, this petty cash is for, for daily expenses. For example, like for purchasing stationery or paying the like the cleaning staff or paying for the like AC repair or whatever like every time you cannot produce a check to the people who is servicing to the organization. Okay, so you have to pay cash as well. So any organization would always keep hot cash available, like in their cash books. Again, it can range from 5,000, 10,000 to 1 lakh, depending upon the size of the organization or nature of the transactions taking place, like per month, per day. Okay. So the owner has withdrawn 5,000 from the office petty cash. Okay. And then after some time, after a few days, he has withdrawn 10,000 from the organization's bank account. Not his own bank account, but organization's bank account by depositing a check. Okay. And then on 30th of July, he took 7,000 worth of stock, that is the goods from the organization, because that goods belong to the organization, and that 7,000 worth goods was taken by the proprietor for his personal use. Clear? So since everything is for the personal use, so all these entries, all these transactions, it comes under drawings account. So this is how it has to be done. This is the second type of compound journal entry. So date is different. So for every transaction, you have to mention the date. Whereas in the first case, you don't have to mention the date in in each and every transaction, because date was the same aspect for all the transactions. The same date, everything has been done. But here the date differs. So you have to mention the dates when the transactions are taken. So take the first example. So he has to withdrawn 5,000. It is drawings account debtor to cash account, because drawings means that's where the money has gone to cash account. Clear? So 5,000, 5,000. So narration being cash drawn for personal use. Okay, here you can, within the narration, you can clearly explain why this type of transaction has taken place. And then is the 25th of July, again, drawings account debtor to bank account, because the money was deposited in the bank. It isn't, the organization will be having a bank account. So from the bank, the money has been withdrawn. So that's why to bank account creditor. Here, the creditor is seen as the bank and not as the organization. Okay. So to bank account creditor, here, again in the narration, we are clearly mentioning being cash drawn from bank for personal use. Again, on 30th of July, drawings account debtor. So 7,000 worth goods to purchase account. So from organization's point of view, it is seen as purchase account. It is seen as purchase done by the proprietor, because they are seeing proprietor as a different entity and organization as a different entity. So from organization's view, proprietor is another a supplier, or a creditor or a debitor in some other means. Okay. So drawings account debtor to purchase account credit, 7,000, 7,000. And in narration, again clearly mention why it has been done, being goods taken for household consumption. So this is the second type of journal entry, because the dates are being different. So the transaction dates, so that is being different. So that's why it's not being posted as three different entries. So is it clear?
Yes,
ma'am,
ma'am.
it's clear.
Yeah. Oh, good. Okay. So we are going to see how purchase returns and sales returns are being entered in the journals. So purchase returns may happen due to various reasons. We know the organization would have purchased the purchased items would have been a defective item, or the items would have been wrongly sent to the organization. It is not the same items, or it is not the same stock, what the organizations has asked for. Or it can be, it can be a late delivery as well. Okay. So the organization would have, requested to send the products, within one particular time, but the products have arrived a little late. So by that time, the organization would have searched for another supplier and would have made it possible. So for many reasons, purchase returns may happen. And again, like sales return, it's the same case. So while sales is being done, the receiver, whether it be an individual or another organization or agency, so they may return a part of your products or the whole product as well. And again, purchase return also a part of the stock or parts of the goods may be returned or the whole of the goods may be returned back. Okay. So let's see, how these transactions are taken place. And you have to be, like sure that, so yeah, the journal entry depicts the accounts payable or cash account. That is, cash account or accounts payable is being debited and purchase returns account is credited. So this is how the entry should be. That is, if it is after purchase has been done and if it is a cash purchase, it should be cash account debtor and purchase returns account creditor. It's not just purchase accounts, it's purchase returns account creditor. Again, here, like in sales returns, it is sales returns debtor and cash account creditor. Not like completely ulta from the purchase return. So this thing, this point, like keep in mind so that, like it would be easy for you to make the entry. Okay. So here we have no illustration of how to make entries for purchase returns or sales returns. Okay, let's see. So it happens in September 2023. So these are the dates, 3rd, 4th, 8th. Okay, these are the dates. And on 3rd of September, sold goods to Prof LLC 5,000. And see, let's see how it's being like entered here. Okay, this is easy. So Prof LLC account debtor to sales account. Okay, because here it has not been mentioned that it's the sales. I mean, it is not a cash sales. So we can consider it as a credit sales. So in the narration, we are not clearly mentioning being goods sold to Prof LLC on credit. And the entries are and then purchased stationeries from Rahat and Company for 3,000. Here you can see it's mentioned as stationeries account debtor. Usually, like when a purchase is done, we usually mention here as purchase account debtor. If it is a credit purchase, yeah. If it is a cash purchase, it should be cash account debtor to purchase account creditor, yeah. But here, since it is a credit purchase, we have to actually mention purchase account debtor and cash account. The purchase account debtor to Rahat Company account creditor. But here it has been mentioned as stationeries account debtor. So why so means usually when purchases are done, only those purchases, like when the purchase is done for goods, only when the goods are purchased for resales, it is like taken as purchase accounts or purchase returns. Otherwise, all other transactions, whether it is cash or credit, buying stationery or buying machinery or buying furniture, like for official use, it's always mentioned in the same name. So if it is a stationery being purchase, it should be mentioned as stationeries account debtor. So furniture is being purchased, it should be mentioned as furniture account debtor. Or if the machinery is being purchased, it should be mentioned as machineries account debtor and not as purchase account debtor. Clear? This point is clear?
Yes, ma'am. So basically, we just have to mention the items that are purchased, right? If it is stationery,
Yeah,
and if
yeah,
furniture.
exactly.
And
So
on
you
the
have to, yeah. Go ahead,
ma'am, on
go
the
ahead.
first one, when goods are purchased, so here there is this LLC name, Prom LLC is mentioned. So the receiver, the one who's purchasing, their name should be written on the data's name
Exactly,
space.
yes. Yeah.
Okay. What rule is applied here? Like
The same rule, like either mostly no, it will come as no, like either the personal account or no, like as a real account.
Okay.
Only no, like
Thank you.
either personal, mostly the personal account rule applies. So the nominal accounts rule applies only when there is no like the gains, brokerage, commission. So these kind of revenue generating entries, no, when that comes, no, so
Yeah.
only there the nominal and no nominal entry rules no apply. Okay.
Okay.
And then the third
One
aspect,
more thing, ma'am.
third, yeah,
Actually, if it is a creditor's account, it should be like in background should be trade payables.
where
Like
the
in no,
second
as
one,
nominal code, yeah, in nominal like it nominal transaction should be
oh, nominal, okay,
yeah. When it comes to
yeah,
nominal
yeah.
transaction, it should be a trade payable. So if it is like
Yes, yes, yeah,
sales
commission
return, it
payable,
should be
yeah,
yeah
commission receivable, yeah.
yeah right
We will be seeing those kind of entries as well, yeah, in our forthcoming sessions, yeah.
yeah.
Sure. Okay, so the third one is purchased on cash from Madison's worth 10,000. So purchase account debtor to cash account. So that is not clearly mentioned. Sold to Arrow and Brothers on credit, and here it's clearly mentioned credit and Arrow Brothers account debtor to sales account. Now, returned to Madison's worth 3,000. That is, we have already purchased goods from uh, Madison's worth 10,000 by paying cash. Okay, we have already paid the cash to Madison's. That is 10,000 has been paid. So out of that 3,000 worth goods, no, we have returned back to Madison. So the Madison's group, they are yet, no, they have to pay back 3,000 worth, no, like mean 3,000 cash has to be transferred to the organization's account. Or what they can do is they cannot deliver again, no, like few more goods worth 3,000 to organization. So they can have, no, like they can have only two more choices. Okay. So how this is entered here is Madison's account debtor, since they are the receivables, I mean, they have received to purchase returns, not just purchase, but purchase returns account creditor. So in narration, we are clearly mentioning being purchase return for defective goods. So it's written clearly mentioned here that since goods are being defective, we are no like returning back the goods worth 3,000 only. That is only the part of the goods are being returned and not the whole goods. And Madison's, they are no like obliged to pay to us either cash 3,000 or goods worth 3,000. Okay. And the next entry, Arrow and Brothers returned goods 5,000. And again, this is sales returns account debtor to Arrow and Brothers account creditor being goods returned. So here we haven't specified the reason because no, like maybe Arrow and the Brothers, no, they haven't communicated why they are returning the goods. So if that is being communicated, no, in narration we can no like clearly mention that why they have returned the goods to the organization. So this narration will always help in no like auditing and no like while filing taxation process. And then paid for packing role. So packing role, it cannot be no taken as packing role account debtor because packing role and other office stationery, everything comes under stationery account. So it has to be mentioned as stationery account debtor to cash account because we have no like paid 3,000. It's no like mentioned as paid. So to cash account creditor. So here you can mention being cash paid for packing role. So it's clearly mentioned in the narration that packing role is the stationery which has been purchased by paying cash. Okay. And then on the same day, that is on the 31st of September, the same day, the company has paid salaries as well as the company has paid the rent. Salaries 2 lakhs and rent is 50,000. So this can be done as a compound entry in the journal. That is salaries account debtor, rent account debtor to cash account creditors because date aspect is the same, cash aspect is the same. So being rent and salaries paid and no like you're adding up these two things and you have no like credit column In the credit column, you are mentioning this sum amount. Is it clear?
Yes, ma'am.
Yes, ma'am.
Okay. We are going to see, I mean, in maybe we have our next session, we can see more journal entries as well. So I'll be giving you, a practice exercise. So what I request you is, try to work out the practice exercise, okay? And in our next session, we will cross check the answers, cross check the entries, and you will clearly come to know if there is a mistake. If you have done a mistake, you will come to know where you have done the mistake, and what should be actually be the right kind of transaction or right kind of entry, which I mean to be done there. Yeah. So in that way, you
Yeah.
can you can very well understand how journal entries should be. Clear?
Okay, ma'am.
Okay. So let's move.
Ma'am, can you
So
repeat? The audio was that. Can you repeat?
which one?
My internet connection was unstable during that time, which you was said. Can you say once again?
Sorry about the. I mean about
About the
this.
working about that practice.
Yeah. What I was mentioning is at the end of the session, so I'll be giving you few exercises. Okay. So I would like you to work out those exercises. So all or no journal entries only. I'm not going beyond the journal entry right now. Okay. So let's be let you be very comfortable with the journal entry. Let you be very aware of how journal entries has to be made. And then once you're thorough about it, then we can move to the working out on ledger postings. Yeah.
Okay, ma'am. Okay, ma'am. Okay.
Yes. Okay. Fine. So these are the basic general entries. So let's move further. Okay. So we are just going to have an overview about what is a ledger. Okay. We are not going to see much deeper into the ledger. I'm going to just show you what is a ledger posting, how it is done, and just a small example of what is the ledger posting. Okay. So ledger is central repository for storing and organizing all financial transactions. So once journal is prepared, all the transactions is being posted in the ledger. It has to be posted in the ledger, and the ledger from the ledger posting, you can directly prepare the final accounts. So there is an intermediate, I mean, if you want, you can prepare the trial balance as well. But preparing trial balance, it's not mandatory for preparing the final accounts. Clear? So trial balance, preparing trial balance is for cross-checking, whether the ledger postings are made correct. So that's it. So once the ledger postings are ready, we can be very well directly from the ledger posting, the final accounts can be made. Yeah. Okay. So we have few ledger rules. The first rule will be debit the receiver, debit the purchases. Of course, if there is a purchase, there would be expenses. So debit the expenses. So any increase in assets or expenses is debited. So that comes under debit column. And the receiver of the benefits is debited. Whoever receives the money value, is considered as a debtor. And credit the giver, credit the sales. So if there is a sales, that should be an income. So credit the gains. So any increase in liabilities, equity, or revenue is credited. So everything comes under credit column, liabilities, equity, revenue. The giver or the source of funds is credited. Again, whoever gives money or money value, they are considered as credited. So these are the two ledger rules. So ledger, why these ledger rules is again as for we have for journal entries, we have journal rules, right? So it helps us in recording and posting of transactions in the ledger. Okay. So and as well as helps in maintaining the accuracy of the accounting records. So let's see. with an
Ma'am,
example.
excuse me, on
Yeah.
that ledger rules, the debit and credit, I'm not a bit got confused, because first you said debit is anything on assets increase, and credit also is something, sales is become a credit. So in both the cases, uh, these are company assets increase, right? In both the cases. Can you make it clear?
In debit, you can see, when the purchase is made, the company is like liable to pay, right? So even though goods comes into the company, if you see, like money value, the cash goes out of the business.
It just mean anything goes out, like
Out
from
of the
the
business.
business
Yeah, you can
to buy
purchase
something,
assets for
that will
the
be a debit
company.
account.
Yeah, exactly. And
Okay.
like any increase in assets. So if you're purchasing assets, obviously the money is going out of the company. Yeah. So that is not seen as a debit. That's why
Okay.
this term, any increase in assets, is seen as like debit. Because while you purchase asset for the company, always the money goes out of the company. Right? Right?
If it
So
goes out,
that's why
it would be credit, right?
sorry.
Yes. Liable, right? So goes out of the money means it's a credit, right? Money I'm giving,
Hmm.
we are giving. That means it is comes under credit or debit. Debit only.
It depends on the type of transaction. Again, like you have to cross-check the journal rule as well.
Okay.
So journal rule, all the transactions, you can like categorize, under these three accounts. That is personal, real, and nominal. So under these three accounts, so the nature of the transaction, what is the type of the transaction we have, and depending upon the nature of the transaction, it would be seen as debit or credit. So in one entry, in journal, it may be no seen as a debit, but in like ledger, it may be no seen as a credit.
Got it. Got it. Like it is okay. Anything debit means if anything from company capital or asset going out and something coming in case that can be a
Yes. So
debit.
here, like in ledger rules is nothing but it's seen completely in like cash aspect. So money aspect. So if money is going out, it's considered as like debit. If money is
Yeah.
coming in, it's considered as credit. That's it.
Okay. The sources should be money in this case.
Money, exactly. Yeah.
Okay.
So in journal, we would see about the nature of the transactions. But here we are seeing the completely in the point of money. Money goes out, it's not considered as debit. It can be money may go out, but like an asset can be purchased, a machinery can be purchased, a goods, raw materials can be purchased, but money goes out, so it's always considered as debit. And in any way
Okay.
the money comes into the business, it's always seen as a credit.
Yeah. Clear.
Yeah.
So in this case, cash will be the debit, and whatever we purchase, that can be the credit.
Yeah. Now purchases is considered as debit because the money goes out. So only when money goes out you can purchase something.
Okay.
Yeah. Okay. So don't worry, like don't confuse yourself, like since this is the first session, like about ledger. In the meantime, slowly you will learn the process. You will like clearly understand, like after we see, like 3 or 4 illustrations, right? Okay. So let's see how it's being posted. So how one like ledger posting is done. So this is like I have taken one example of a journal entry. So we are going to post this journal entry into the ledger. So the entry is a cash entry, that is a capital account. So cash account data, like 10 lakhs. So capital account, that is the company's owner. The owner or the proprietor has invested 10 lakhs into the business as capital. Okay. So this is how journal entry is being made. So here is the date, and here will be the particulars. Here will be the journal folio, and here will be the debtor, and here will be the creditor. Okay. Okay. So when posted in ledger, So two different, accounting transactions are taken. Okay, two different columns are taken based on the the type of transaction. That is one for debtor and one for creditor. So first thing is debtor, which is a cash. So for cash account, we are now having a ledger post. So this is the format, this is how you have to prepare the ledger. That is, there should be two columns. So in the left column, it should start with debtor, so date, particulars, journal folio, amount. And then the second column, the right column, again date, particulars, journal folio, amount, but it's a credit column. So left side is a debit column and right side is a credit column. So this is applicable for all the type of accounts, whether it's a cash account, like capital account or purchases account or sales account, sales returns account, purchase returns account, whatever. Okay. So this is how it should be done. Now, so take this first transaction, that is cash account debtor. So it is clearly mentioned here as debtor. So take it to the debtor column and take this into the debtor column. That is the opposite side. So to capital account debtor, and this cash account is taken to the credit account, because here we have this rule, right? All the purchases and expenses are seen as debit, and all the incomes and sales are seen as credit. So we are applying the rules here. So we are taking completely ulta of this. That is, capital account creditor is taken here as a debtor in the debtor column, and cash account debtor is taken here in the creditor column. Here. So if you see this in in money value, it means so cash has been invested in the business.
This particulars is just a narration only, right? It doesn't mean it has been that account. The cash account, which should be like it's in the while viewing a ledger in cash account, it's a debit transaction, right? It doesn't mean like it was this particular is just a narration only, right?
Narration is done only for journal entry, not for ledger posting.
Okay. So ledger posting will be done through journal entry only, right?
Yes, exactly. Yeah.
So yeah.
And see, in terms of money value.
Yeah, if something has to be in ledger, either it should be any transactions to be done through journal entry or through a control account by the sales or purchase account, like the control accounts of sales and purchase, right, ma'am?
Can you repeat your last line?
Yeah, if any transactions that has to be appear in the ledger, it should be either in the way of journal or in the way of passing entries to the control accounts like sales invoice or through purchase invoices.
Exactly, yes.
Right. So my point is like what you said was when you post it in a ledger, it comes to be the particulars, but it's only a narration, right?
Yeah.
Okay. So what we understand from your learning was like it was like a ulta of cash account, but it is in cash account. It's a debit transaction. It is under debit. The amount is under debit only in the when post in ledger also, and in capital account it is in credit account in credit transaction credit side. It is same as a journal entry, and particulars is just only a narration.
And other thing is, important thing is you have to see it in the money value.
Yeah.
Like if you can see, cash is written, is recorded in the credit column. It means
Yeah, it means cash has to.
come into the business, so it's seen
Yeah.
as credit. Yeah.
Yeah.
And why capital is being seen as a debit is like capital is seen from the owner has given the money, so it's taken into the debit column. So completely opposite. When cash comes in credit column, obviously the other entry should be posted in the debit column. Clear?
Yes, ma'am.
Yes, ma'am.
Yeah. Okay. Don't worry, we will see, like more examples. So maybe, like after, like again, 5 to 6 examples illustrations, you will like have somewhat an idea about, the ledger post. Okay. Fine. So
Okay.
this is how it's done. Yeah. I'm just giving you a glimpse of, like how ledger posting is done. Okay. So I'm not going to, like go deep into this. First, we will, like be very, like confident in journal posting, because still we are yet to see, the nominal accounts entry. That is the brokerage, commission, bank interest. So all these things, like accounts, accounts payable, accounts receivable. So all these comes under, like the other entries. So you are going to, see the journal entries, in another, like 2 to 3 sessions. Let's be very strong and clear on that. And then, like we will see about ledger posting as well. Okay. So what I'll do is from our next session, we will have, like 3 or 4 illustrations for journal and 1 illustration for ledger. So in that way, we will be learning both. Okay. Is that fine?
Okay.
Okay, ma'am.
Okay. So this is the exercise I'm going to give you. So there are 3 exercises here. One. So this now all these are not like you have to prepare only the journal. Okay. So don't worry about the lecture right now. So just prepare the journal and keep the answers ready with you. So while we have in the next session, when we meet in the next session, we will cross check with the entries. And then you will clearly come to know whether you have done everything, like pakka, or if you have like done any mistake, minor mistakes or posting, like if you have missed out something, so you will learn. Okay, so on the hands, you will learn what mistakes you have or what errors you have like made, and you can immediately rectify them on them. Okay.
Okay.
Yeah.
Okay.
So
ma'am.
this I will like forward it. The PPT I'll forward it. Yeah.
From where
Okay.
this PPT will come to mailbox, or ma'am?
To your WhatsApp. To your WhatsApp. Usually it's sent by WhatsApp, right?
Okay.
Yes.
Yes, ma'am. Yes,
Yes,
ma'am.
ma'am.
WhatsApp.
Receive
WhatsApp.
it by WhatsApp. Okay, okay. Yeah, you will get it by WhatsApp. If it comes as a PDF file. Okay.
Okay.
Okay, then. So if there is no doubts, we can now wind up the session for today. We will meet in the next session.
We
Okay.
will have the doubts in the
Thank
next
you.
section.
Sorry, you would like to have a doubt clearing session. Next, yeah, sure. Next week we can definitely have.
Ma'am,
Thank
we'll
you,
be
ma'am.
able to cover up all this by before exam, because we have an exam, no?
I don't know, like when is your exam?
It's in the
Uh,
next week, like from 8th it starts, 7th.
next, you mean in the November?
Yeah, November 7th it starts.
Okay.
Dear Jebra Rose, sorry for interrupting. Your exam details will be and all the related things will be informed by the student affairs. And Lavanya ma'am is not the concerned person for the same. So you can check with the student affairs regarding all these things. Okay.
My question was, will we able to cover up before the exam? I didn't ask what's my timetable. I know that. Anyways,
Okay.
thank you. Thanks, ma'am.
Yeah, sure.
Happy.
Next week we
Bye.
will try to cover the ledger.
Okay, ma'am. Thank you. Thank you,
Okay.
ma'am. Bye-bye.
Bye, ma'am.
Thank you. Thank you, ma'am.
Thank you, ma'am.
Thank you, ma'am.
Thank you, ma'am.
Yeah, bye bye. Have a great week.